gold miner Alamos Gold moving up today, trading in record territory. It's been more than a double over the past year. It beat on revenue and earnings expectations in the fourth quarter, announced record high gold production in 2024. That was up 7% year on year. And Alamos expects to raise output by another 7% this year. We're joined by John McCluskey, President and CEO of Alamos Gold. John, always great to see you. Thank you very much indeed for joining us.
Thank you for having me.
Just remind us, I'm looking at a report from National Bank. It's actually from November, but they're talking about that island gold mine. You and I have talked about it before. You revived it. There was skepticism. You've made it work. That one is producing, according to National Bank at that time, about 59% of your discounted cash flow. Is the mine that profitable?
It's a very profitable mine. It's high in grade. It currently has a throughput of about 1,250 tons a day. We're in the process of a major expansion of that mine that will take production up to 2,400 tons a day in this first phase, and probably another step beyond that. It's a very profitable mine, and it's between Mulatos and Island Gold that's been driving a substantial amount of our cash flow. But in terms of free cash flow, we're still investing quite a lot of money in that expansion, but we'll be done by the middle of 2026. So this is the last sort of full year of capital spend that we have on that project, and after that, it turns into a real cash machine.
And it's by far your most valuable asset, it looks like, right now.
It is indeed.
Right.
It's partly to do with the pace at which it's grown. I mean, when we took it on, we had roughly 700,000 ounces of reserves and maybe 1.7 million ounces in all categories. Today, it's about 2.4 million ounces of reserves and nearly 7 million ounces in all categories, and it's still growing. The fact that it's growing like that is good enough, but the grade has got better, and that rarely happens. Generally, when you expand the reserve, it can be at the sacrifice of grade, but we've seen grade go from 9 grams when we started to 10.2 grams up until the end of last year. And according to the statement that we just put out yesterday, the grade has grown to 11.4 grams for reserves and almost 16 grams for resource.
Your next most valuable asset, according to this National Bank analysis, Young-Davidson in Ontario, worth about $6 a share, they reckoned at that time. And then your Mexican Mulatos complex, a fairly small portion of your net asset value?
It's always been somewhat undervalued, I think, because it generated over $200 million in free cash flow last year on 205,000 ounces of production. So it produced more gold than Island Gold did, and we've continually made new discoveries there, and we're currently we just received a permit a couple of weeks ago to develop the next phase of that project, which is a higher grade ore body called PDA. Grade's about 5.7 grams. And it's that compares to about the 1 gram material that we've been mining from open pit for nearly 2 decades. So this is an exciting new phase for Mulatos, and I think what is happening is it's going through a bit of a re-rate in the eyes of the analysts.
We've only about 2 minutes left. You're obviously happy with gold at almost $3,000 US. What are you going to do? Pay a big fat dividend to shareholders?
Well, think about all the growth that we have right now. We're putting about $1 billion into the Island Gold expansion. About $1 billion will go into, it's Canadian dollars, will go into the development of Lynn Lake. It's about 650 US, so that's roughly $1 billion Canadian. We have a lot of places to put the money, and I put it in this perspective. It took us 20 years to get to 500,000 ounces a year, and we're trying to get to 1 million ounces by the end of the decade. So, we've got some aggressive plans, and I think there's a far better return for our shareholders seeing us invest that capital and expand our mining operations as opposed to just increasing dividends.
And you're not, what about stock buybacks? Are you keen on those at all?
Well, we have done them. When our share price, it got down between $6 and $8 a share a couple of years ago, we were aggressively buying back stock. But right now, as I said, with well-laid plans for for significant growth coming up in 26 through 29. You know, my feeling is there's some really exciting returns to be had just by watching us grow production and expand the company. I mean, if you put it this way, you know, before we started all that M&A activity, we were down to under 2 million ounces of reserves, and the gold price was about $1,200 an ounce. Now we're at 14 million ounces of reserves, and each of those ounces has a value of nearly $3,000 an ounce. That's over $40 billion of in situ gold value. And we've built all that through a combination of astute M&A and very aggressive drilling. And I think that's where the real meat and potatoes value lies in the company.
We had better jump, John. Always great hearing from you. Thank you very much.